What is up, everybody? Welcome back to Stock Talk with Paul. Today, we're going to be learning about another commonly used indicator that's going to help us determine the trend direction in a stock price and to help us also to determine whether that trend is strong or weak. And the name of this indicator is called the MACD, Moving Average Convergence Divergence. So say that real fast 3 times, then head on over and subscribe to the channel. All right, now that you got that out of the way, let's talk about why we use the MACD and how we use it. Well, it was designed to reveal changes in the strength, direction, momentum, and the duration of a trend in a stock's price. It's going to help investors like you and I understand whether the bullish or bearish movement in the price is strengthening or it's weakening. Very important for us to understand how to use this when entering and exiting a trade. So let's just go over all these components here real quick so that you understand how to use them. So this is going to be your MACD line, your signal line, your histogram bars are here. Right where it changes from red to green, this flat area is 0. All right, and your histogram bars here, they're going to be one way of telling you the strength and momentum that's coming into the stock. Um, so your MACD line is calculated by subtracting a 26 exponential moving average from the 12-period exponential moving average. That's how this line is calculated. A 9-day exponential moving average of the MACD is called the signal line. This is then plotted on top of the MACD line, which can function as a trigger for buy and sell signals. Okay, so how do we use this to enter and exit a trade? All right, so it's fairly simple. The strategy goes um, when your MACD line crosses your signal line, that's where you're going to want to enter your trade. There's some other things you're going to want to take into consideration. Before I said that these histogram bars are one way of measuring strength and momentum. Well, your lines are as well. So the faster that your MACD line crosses your signal line and the further that your MACD line is from your signal line, as well as how far away is your MACD line away from your histogram bars. It's all going to tell you how much strength and momentum is coming in. As you can see right up into here, it's getting really far away from these histogram bars, and it's getting really far away from the signal line, especially right in this area. So, even if you would have took a position in anywhere in this area, you would have done really good. So that's how the strategy goes. And then when you're exiting your trade, pretty much the same thing. As soon as your MACD line crosses your signal line, that's going to be your signal that it is moving into a bearish trend. But like I said before, you're going to want to use other indicators, and you're going to want to use other technical analysis like support and resistance trend lines, things of that nature. But we'll get into all that later. I just wanted you guys to understand this. I'll take you over to a chart, a daily chart, some other daily charts, and we'll just go over a couple examples so you can see how it goes out on a longer period. All right, guys, I had to take us over to Hewlett Packard. They got some really good examples here. As you can see, we're in a downtrend. Um, our MACD line is very far from our histogram bars, and it's below our signal line. But as you can see here, we crossed here, and you would think that in strategy we should take a position here. No, we should not, because it didn't cross this line, this signal line, very fast, and it isn't pulling away from this line very fast. If it would have been a sharp upness like that, then I would have said, yeah, I'd take a position, but it hasn't. I would have sat on this and watched it. That's just what I would have done until we could see that it's getting close to the 0 line again. And as you can see, I want to point this out. You would think that because it came over a 0, that maybe we should take a position because we got a nice, some nice bullish movement here. Well, not really, because um, had this, gone up and was over this already, then I would have said yes. But it didn't. It didn't tower over these histogram bars. So to me, I would have waited even longer. Here, see how it shot up past these. That's when I would have took a position in there somewhere. So that's just one way to not make a mistake. Um, as you can see, we're downtrending here again. It's just crossed. It didn't get that sharp move up again you were looking for. I would wait. If you waited till it crossed here, you might, make a little money there. So let's go over here. You can see how it crisscrosses back and forth a bunch of times. You never get that sharp move up with these large histogram bars or the MACD pulling away. So not a very good time to get in. But here, as you can see, the MACD was crossed, or the signal line was crossed by the MACD here. And as you can see, it's really pulling away here. So if you would have got into here, you would have made a really nice run up. Um, and even into if you would have got out somewhere around in here, you still would have made a really nice chunk, even though it still went up just a little bit more. Um, so I mean that's one way to trade this MACD strategy. And like I said, you're going to use this with other indicators and other technical analysis to help you determine whether or not you should get into it. So let's look at a couple of those situations here. And see, this is one that I really like here. Let me show you this. See how fast this shot up? And it's just moving away, and our histogram bars are getting bigger. Um, this is where you might want to, take a position in here when it's got that really sharp move up. Here it didn't. You see, it didn't have that sharp move up. So it's something to watch for. Now, if we take a look over here at present day, um, everything is looking really good for this Hewlett Packard. We can see that we are above our 8-day. Um, we are above our 21, 50, and 200 day. We have come up past this um, zero. We are pulling away really fast for these histogram bars. This is where I would take a position into this. Again, guys, I'm not a financial advisor, so don't make a play on this just because of what I said, because you're most likely to lose money. So that's really all I have for you guys in this video. I hope you guys learned something. Let me know how I did in the comments below. If there's any questions you got, shout them out down there. But yeah, so next time we'll learn about the RSI. And until then, we'll see you.